Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now commodities, they're once again starting to attract a lot of attention. This has been on a scale not seen since the global financial crisis of 2008, as the new super cycle firmly gathers pace. Right now there are two major trading plays driving the commodity markets. The first is the short-term macro-driven volatility play that has continued to deliver an endless flow of opportunities to capitalize on the week-to-week huge price swings. And then there's the most lucrative yet least publicized, which is the super cycle. Right now the super cycle play is whipping up an inflationary storm that is sending a number of commodities ranging from the industrial metals, energies to agriculture skyrocketing to fresh multi-year highs. Aluminium prices, they've soared to 13-year highs. Nickel prices have hit 7-year highs. Uranium prices have surged to 9-year highs. The bullish momentum also spilled over into other commodities, with natural gas prices rallying to over 7-year highs, sugar prices hitting 4-year highs, whilst we have steel and lithium prices climbing to all-time record highs. Uranium, natural gas and steel prices, they are up 219%, 240% and 252% respectively, whilst lithium prices are now up over 215%. The best performing commodity so far this year, that is crude oil. So crude oil prices, they're currently up over 287% from the 2020 lows. There are plenty of reasons why commodities are on the move, but the key driver is rapidly surging global inflation, tightening supply, logistical bottlenecks, and booming demand across many highly essential commodities as a result of the COVID-19 pandemic. Commodities have now firmly positioned themselves as one of the most liquid asset classes, which continue to present savvy traders with opportunities to generate huge gains fast. Looking ahead, one of the biggest events that traders will not want to miss out on next week will be the Federal Reserve's policy meeting. That will be followed by a press conference chaired by Jerome Powell, which always has the potential to move the markets. As you know, volatility creates opportunity. Banks, hedge funds, they are making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 4 months to go. So if you've been kicking yourself for missing out on some of the biggest trading events so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. The first thing to be aware of that as we go into next week is that we have China on their public holidays at the start of next week, and of course the FOMC statement is going to be on Wednesday. Last week, as we talked you through, we had quad witching on Friday, and also you're starting to see an acceleration of end of quarter profit taking for September 2, which, as we discussed with you, would drive capital into the dollar. We positioned ourselves long the dollar with 6 trades. In fact, we were able to bank over 400 points on those positions on Friday, really maximizing that risk off sentiment, as traders were very simply booking their profits for the quarter, which of course commodities traded in US dollars means that capital then flows back into the dollar, which is a perfect opportunity for you to capitalize on that typical slingshot move high that we get on the dollar over the 3rd week of September, which we've seen play out in the last week perfectly, with the dollar index breaking out to 1-month highs. So with that, as we discussed with you last week, we were anticipating pressure on gold, on silver and platinum. So last week, gold prices, they dropped down 1.8%. Silver prices, they dropped down 5.8%. Platinum prices, they broke down 2.6%. None of this will be a surprise to you if you watched our week ahead commodity report last week, where we warned of this, that this was something that you could capitalize on. Make sure that you're banking into strength the previous week. You can look to then position yourself long the dollar, or alternatively, you can also sell short the metals as well. Both of those strategies have worked out in the last week here. So let's have a look at it in more detail. So silver prices, they're down 5.8% in the last week. This time last year, over the month of September, silver prices, they broke down over 10%, and we have seen hedge funds and money managers they've continued to trim their overall net long position on the metals yet again in the last week. This is putting more pressure on silver, platinum, palladium, gold in the last week. The good news is if you're looking to buy back into these markets, typically there's a big opportunity once we move into October. Just be mindful that next week with China on their public holidays at the start of the week, this can create thinner liquidity, and of course traders will be cautious ahead of Wednesday's FOMC statement. So in the short term, we could continue to see the dollar drive higher here. We're certainly well positioned for that. We're in the right spots to capitalize on this with the dollar potentially breaking out to multi-week highs here. If we do see that price action, we will certainly benefit here at the Gold and Silver Club, and then we'll look at some great opportunities to come in and sniper in to the sell-offs that we've seen on the metals lately as we get towards the end of the month to capitalize on a cycle which we typically move into October, when we move into a new quarter, when you have fresh capital coming back into the markets. But for now, be mindful, our expectation is that the dollar will continue to gain strength, so I would be very careful if you're trying to pick the lows here at the moment in the short term, for example for silver, for gold or for platinum, because you may see more downside in the short term for those markets. Again, we talked you through that in detail the previous week, where we banked over 1,500 points on copper as we saw copper prices break out to multi-week highs. Took advantage, banking into strength, making sure that we're locking in when we get these fast moves, fast gains in the market, and making sure not to give back those profits quickly, because we are seeing a lot of volatility right now. You need to be nimble, make sure that you're regularly locking in profits. We talked you through all of this at the beginning of the month, where we anticipated a bull trap to come in for gold and silver after the non-farm payroll data at the beginning of the month. This is where we banked gold at 1,826 US dollars per ounce, and we banked our silver position at $24.70 per ounce. This all after Friday's non-farm payroll at the beginning of the month. The following week, what you had is the Labor Day public holiday, thinner liquidity in the US session, which then drove a sell-off on the Tuesday when traders came back, and then later in the week you had the European Central Bank announcement, where we also saw more pressure to the downside on the metals. And then in the last week, we've also had quad witching, the expiry of futures and options contracts, which happens on the third Friday of every quarter, and that all provides more catalyst for the dollar to go higher as traders are booking their profits for the quarter. Capital flows back into the dollar, and this puts pressure on the metals. All of this very straightforward. I'll give you a statistic on this, but gold has essentially now sold off 9 years in a row over the month of September. If you know that, it will help you massively for your trades. As you know, bull markets, they do not move up in a straight line. They zigzag, and that presents savvy traders with back-to-back trading opportunities. One of the biggest obstacles that holds retail traders back from achieving their desired success is not having access to the data and market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you will end up wasting lots of time, money and effort and have no results to show for all of your hard work. If you want to thrive, not just survive in these highly macro-driven markets, then you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader using outdated technical analysis and gimmicky technical indicators will not work. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with superior levels of precision, confidence, and profitability. We still have another 4 months left to go this year. Time is the most valuable commodity you have. Make sure that you don't waste it. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions. You need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. This is where you want to be utilizing data, statistics, facts in the market. Alongside that, learn and understand the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, utilize market intelligence data, and of course be aware of key areas of liquidity in the market. Understand the intermarket relationships, the ratios in the market, marry that up with fundamentals, macroeconomics. Alongside that, be aware of sentiment, capital flows, and of course how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You also get access to our real-time trade ideas institutional research and market intelligence, access to our private Members Academy membership site, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.